Good afternoon, everybody. Scott Riley, the Market Update Desk, August 26th. A new week is starting off here. We do start the week off a little bit slower, but we ramp up big time the back end of the week. Today, we got durable goods orders, which on its surface is a little misleading. It showed a pop of over 10%, which appeared much stronger than the estimates of a plus 5% increase. But the report is heavily influenced by aircraft orders. And when you strip out the transportation, part of that index, it actually fell or minus 0.2%, which was worse than the estimates of a negative 0.1. This, and on top of it, our old friend revisions came in. Negative revision to June, which made the report even weaker. Now, the core durable goods orders also fell 0.1, weaker than the flat estimate of what the market was expecting. On an interesting note, the shipments of those core goods get plugged into the GDP, and that fell 0.4%, which was weaker than expected. So, all else being equal, this should trim the Q2 GDP estimates that we're going to get when they're revised. Let's go through what's coming out this week. So today we had durable goods orders. Tuesday we get home appreciation through Case-Shiller, FHFA. Also get consumer confidence. Wednesday, mortgage apps. And here comes the big thing for the stock market, which will also affect the bonds a little bit. NVIDIA earnings. NVIDIA has been the 900-pound gorilla pulling the stock market forward. And that stock has bounced a lot over the last 3 weeks, up and down. So it's going to be interesting to see not only what the numbers are for earnings, top and bottom line, but how the market perceives the forward sales. And that's going to be a big effect on specifically the market, stock market on Wednesday, but going forward through the rest of the week also. Thursday, we get initial jobless claims and kind of what we talked about just a minute ago, the Q2 GDP, the second reading. Now, this durable goods order definitely could have an effect on that. We also get pending home sales. Now, remember, we got existing home sales last week. Pending home sales of existing should show positive again, we believe. Friday, we get the PCE, which is going to be the big thing we're looking at for the week as far as where rates are going to go to. And also, it's going to be one of the major indexes that the Fed looks at when determining how much they're going to drop the Fed funds rate on September 18th. So this will be an important one. Now, in the bond market, we're seeing the bonds bounce a third time off this resistance level of 3.80 in the 10-year. We've hit against it 3 times. Will we get below it? If we can close below it and hold, that next level of resistance is about 3.65. So that's a big run that we could have to the betterment, which could give us better mortgage rates. Mortgage-backed securities are flat today, but we did pop a little bit on Friday. We moved above a resistance level, so that is a good news. We hope you find all this information interesting and valuable and worth your time watching. We appreciate everybody watching us. The Market Update Desk is your original singular market news source for West Michigan. Brought to you by Scott Riley, NMLS number 157524. Give us a call. We can break down this information further, help you get pre-approved for your mortgage. Also, don't wait on interest rates, specifically if you're looking to refi. A lot of times we get short windows of opportunity. Give me a call. We'll see how much money you can save. 616-293-2189.